Hey everyone, in this video we're going over Alibaba Group, what I think about the stock, what I'm doing with it, and what's happened recently. Now before we get into it, if you could smash the like button, it really helps the YouTube algorithm, and if you haven't subscribed yet, please subscribe. Let's get into it. Alibaba stock is down almost 5% at the time of this recording for today. The stock is $174.09. This is after already going down so much this year. For example, year to date, this stock is down 23.63%, down $53.85 from the beginning of this year until now. I mean, this stock has been rough to hold on to. In the past 5 days, it's down 11.5%. In the past month, it's down almost 17%. In the past 6 months, it's down 35.75%. And over the past 12 months, this stock is down almost 33%. I mean, this stock has been crashing basically just week over week. It continues to go down. But in my opinion, you got to value a stock based on its fundamentals and what the future looks like. So, we're not going to get deterred from the stock going down. That just creates better buying opportunities. Now, I just want to ask you this. Do you remember what happened to the entire economy in March of 2020? I mean, every stock was basically at a 52-week low. The whole world was basically ending. I mean, stocks were really, really cheap. If you could go back and buy a stock for what it was trading for at March 2020, I mean, most people would love to be able to do that. Now, the funny thing is Alibaba in March of 2020, at the bottom during that entire period, it was $181, March 20th, 2020, $181 a share. So we're talking about the stock is currently cheaper than in the bottom of in 2020, the bottom price in March. Here's the chart through 2020 through 2021, and the bottom price is higher than it currently is right now. Well, how is the business compared to then? Well, if you look at this right here on the right, it's showing the year-over-year growth across its revenue in all different segments. And if you notice something, I don't see any negative numbers there. I mean, everything as far as revenue, all their businesses are growing at very great rates. I mean, we see 82% growth in their other segment on China commerce and retail. We see huge growth in cloud, growth across the board everywhere. Now, as far as net income, they had slightly less net income compared to a year ago's period for this last quarter, which ended June 30th. But that said, I mean, their net income was still extremely positive. We're talking about $6.6 billion in net income, revenue growing, and basically the only reason it was down is they spent a lot more on sales and marketing and things like that. But $6.6 billion in net income for the quarter, if you annualize that number, like forget about it continuing to grow, annualize that's $26.4 billion in net income for a year. If you put the same PE today as Apple has, Google, or Amazon on Alibaba, I just want to show you what the market cap would be. I mean, Apple has a PE of 29, as does Google. That would create a market cap of 765 billion for Alibaba. Amazon has a PE of 56. Alibaba with a 56 PE on this net income number would be 1.5 trillion basically. So I mean, and Alibaba currently has a market cap of 479 billion. So clearly Alibaba trades at a huge discount to its American peers. Now, obviously, Alibaba's in a different circumstance versus those companies. So the question becomes, what is a fair value for Alibaba? And obviously, a lot of people could argue that these American big tech companies are overvalued right now. So when taking into account for growth, the bottom line is we want to find out what's a fair price for Alibaba, and we're going to do just that. We're going to use this analyzer tool to basically make our own assumptions and then use those assumptions to determine a fair price. For this analysis, we're doing a 10-year analysis. We're going to create our own assumptions, and we're going to see the historical. So on the left side, you see the historical numbers. On the right side are the assumptions we're putting in. So the first thing is revenue growth. Well, in the last year, they grew 40.7%. Over the last 5 years, they had an average growth rate of 45.9%. Now, I want to be extremely conservative to really just see what is the true price in a very conservative manner. So that's why I'm putting a low assumption of 15% growth, a mid assumption of 20%, and a high assumption of 25%. I think Alibaba are going to destroy these numbers, but I want to keep it conservative. I don't want to be putting what their history was of 40% or 45%. As far as share count, I'm basically leaving it flat. I'm just assuming they're not going to buy back shares. They're not going to issue new shares. In reality, I do think they'll probably end up buying back shares, but I want to keep it conservative, so I'm putting 0, no buybacks. As far as profit margin, I am lowering their profit margin, even though I think with scale they continue to have even higher profit margins. Their profit margin in the last year was 21%. In the last 5 years, it averaged at 24.6%. I put a low assumption of 18%, a mid assumption of 20%, and a high assumption of what their 5-year average was, which was 24%. I'm not assuming that they're ever higher than they were in the past. As far as free cash flow as a percentage of revenue, in the last year, they did 28.2% free cash flow as percent of their revenue. Over the last 5 years, it's basically been pretty stable, 29.8%. I am basically assuming in a low and mid scenario, much less percentage being free cash flow. I'm putting 22% as a low, 25% as a mid assumption, and the high assumption I'm putting as just what their historical number has been at 29%. Now, as far as price to earnings, what their PE will eventually be, I'm not pretending it's going to be anywhere close to what Apple or Google at 29 or nowhere near Amazon with that 50 whatever number. I'm putting a low assumption of an 18 PE, a mid assumption of a 20, and a high assumption of 22. So much fairer valuation metrics compared to US big techs. And the same for price to free cash flow, 18, 20, 22. And then the last thing it asks is, what do you want to make per year for the next 10 years? I just put 10%. I think that's a nice, easy number. It beats the market. If you want to make 10% every year from this year forward for the next 10 years, what should you pay right now for the stock? Well, based on those assumptions, if we want to make that 10% and the stock is currently trading at 173 and we assume those assumptions come true, well, on the low assumptions, if we're going off of price to earnings, we're talking that the stock should be trading for at least $301 a share. Based on discounted cash flow, we're talking about $368 a share. On the mid assumptions we're talking between $527 to $658, and on the high assumption, we're talking about $988 to $1,193 a share. Now, those are not the prices that it will be in 10 years. Those are the prices it should be today if you want to make an additional 10% every year from today forward for the next 10 years. That's based on the assumptions we put in. So, as you can see, this stock is currently trading for about half of what our low assumption is giving us. Now, in my last Alibaba analysis video, I showed assumptions from 25 to 29% growth in revenue, so higher revenue growth, but I was doing it based on 5 years rather than 10 years. For this video, I wanted to be more conservative in the revenue growth, but over a longer investment time horizon. Now, if you haven't seen that video, I'm going to link it in the description. I highly recommend it. We go into a lot more details on numbers, but that said, so that's in the description. I just want to say, I did say in that video that if the stock went down, I would be adding more. In that video, I showed that I bought about 100K worth. It was 500 shares at the time. It was about $194 a share. Well, as I said, if the price goes down, I will continue to add as long as the future still looks just as bright. And that is exactly what I did. So today, I did buy more shares at a price of $174.22 on average. I added 2,000 shares today to my account. It was a separate account that I added it in, but still same thing. They're both my accounts. I put on the left side a screenshot of all the buys today. You can see the date on the bottom, 8/17. I bought 500 shares, 500 shares, 500 shares, and another 500 shares. They were all basically $174 a share. It was just a couple cents different on each one of those orders. 2,000 shares, it cost me just under $350,000 to buy these shares. Clearly, I am bullish on the long-term prospects on this stock, and that is why I continue to add. So I wanted to give you guys the update. Now, I think at these levels, the long-term reward far outweighs the short-term risks. But that said, there are a lot of risks involved in buying a Chinese stock right now. Now, I could be wrong, and I'm not a financial advisor, so always do your own due diligence. Now, for me, I think a year from now, looking back, just 12 months from now, I think anyone who looks back is going to think, wow, I should have bought the stock. Buffett always says, be greedy when others are fearful and fearful when others are greedy. And right now, everyone is fearful of Chinese stocks. And I think Alibaba is the best Chinese stock. So getting it on discount is something I am very interested in doing. And that is why I added. And if it continues to drop, I will add more. Now, for anyone who hasn't watched my channel before, please be aware this is just one of many investments, and I do not recommend ever having too much risk into a single stock. I don't like to be over allocated to any single stock. It's just not worth the risk. Have I done it before? Yes. I am not doing it in this instance. This is not my largest position by any means. That said, I am very bullish on the stock, and I want to be able to buy more if it continues to go down and earnings continue to go up. Now, I'm curious if you're buying Alibaba on this dip. Do you own it? Are you adding more? Comment below. Thank you for watching. If you haven't liked the video and you made it to the end, please like the video. And if you're not subscribed yet, definitely subscribe. We're going to be doing some probably giveaways soon, so just a sneak peek at that. If you listen to the end, you get to hear it first. We're also, we have a lot of new content on the way, and a lot of people have been asking for my basically investment journey, a story more about me personally. Probably going to be putting that video out pretty soon. We're working on that now as well. Thank you for watching. Until next time.